What if the biggest untold story in AI isn't about the dazzling GPUs everyone talks about, but a crucial component hidden deep inside them? We all hear about NVIDIA, and rightly so. They dominate the AI chip market, fueling the massive data centers big tech companies are building. These tech giants are pouring hundreds of billions of dollars into infrastructure, with spending expected to top $1 trillion by 2028. It's an undeniable boom for AI chip stocks. But while GPUs certainly grab headlines, they depend on an unsung hero, a specialized piece of memory that's quickly becoming the true bottleneck for performance. High bandwidth memory, or HBM. Think of it this way. Your super powerful GPU is like a high-performance race car, designed to process data at incredible speeds. But if its fuel tank, the memory, cannot deliver data fast enough, that engine chokes. Traditional memory components simply could not keep up with the increasing appetite of these advanced GPUs. That's why demand for HBM chips has absolutely exploded. These components are expensive, and they are critical. Only a few chip makers produce HBM, and SK Hynix has historically led the charge, building strong ties with NVIDIA. But a challenger is rapidly emerging, poised to shake up the market: Micron Technology. Micron was a bit late to the HBM race, we will admit, but they are making incredible strides. Their latest generation HBM3E12H product is now ramping up, and they expect it to become their biggest source of HBM shipments this very quarter. Micron even scored a significant design win with Advanced Micro Devices' latest GPU, the MI355X. Analysts expect AMD's new chip to compete more aggressively for data center share against NVIDIA, which spells excellent news for Micron. Micron expects to capture about 25% of the overall HBM market share, matching its general DRAM memory chip market share sometime in the latter half of this year. That's rapid progress, considering their starting point just a few years ago. And Micron is not stopping there. Their next generation HBM4 development is going exceptionally well. They are already delivering samples to customers, promising 60% higher performance and 20% less power consumption than their current HBM3E chips. They plan to ramp up volume production next year. The financial results already reflect this progress. Micron's HBM revenue jumped 50% just last quarter, and their total DRAM sales climbed 51% year over year. Management anticipates their HBM3E ramp-up will push gross margins even higher this quarter, hitting 42%. While HBM is certainly a driving force, it is not the only factor boosting Micron. Device makers also need more traditional memory chips for on-device AI capabilities. Think about powerful AI features coming to PCs, smartphones, and even self-driving cars. This demand for more powerful memory chips for on-device AI could spark a significant wave of smartphone upgrades, representing another massive catalyst for Micron. All this progress has analysts taking notice. Following Micron's recent earnings report, Rosenblatt Securities placed a staggering $200 price target on the stock, representing an 80% jump from current prices. The key driver behind this ambitious target? Capacity constraints. We are hearing that SK Hynix has already sold out its entire HBM capacity through 2025 and expects to finalize 2026 volumes within the first half of this year. With DRAM wafer capacity expansion more than 18 months away, this analyst sees Micron's income model reaching all-time highs. They find Micron's current valuation, less than 14 times forward earnings, extremely attractive, especially given its strong balance sheet and potential earnings leverage. Now, before you rush out and buy shares, we need to acknowledge an important point. Micron is a notoriously cyclical stock. Since they manufacture their own chips, they have significant capital expenditures for equipment and capacity. A downturn in demand could hurt both sales volume and pricing, heavily weighing on earnings, as we saw in 2023 when demand from China vanished. That said, the projected strong growth in AI spending could provide an extended boost to Micron's revenue and profit margins for the next few years, as long as they maintain their leading-edge HBM technology. This could mean a prolonged period of very strong earnings growth. Yes, at some point, Micron will likely face another big drop in demand, and earnings will suffer. But the long-term trends undeniably favor growing demand for memory in both data centers and consumer devices. So, for investors looking to participate in the massive AI infrastructure spending, without paying the premium for GPU makers like NVIDIA and AMD, Micron represents a compelling value at today's price. Is this the quiet giant you have been waiting for in the AI revolution?